but we're also very willing to invest in the team. And that can take the form of training the team. It can also take the form of adding to the team. A lot of times, companies in the lower middle market may be running very lean. And there's a couple risks from that, right? It's not just what's their capacity, it's also burnout. Are we going to lose great folks when we ask them to do even more?
Welcome to the Private Equity Value Creation Podcast, where we interview leading investors, operators, bankers, and advisors to help you answer one question: how do we increase the enterprise value of our companies? My name is Shiv, and each episode I will dive deep with a guest to help you become a better value creator and capital allocator. So with that said, let's jump right in and let's get started with today's episode. My guest today is Eliot Kerlin, and he is the co-founder and managing partner at Broadwing Capital. And what I really liked about this conversation with Elliot is that they have a very intentional approach around their operating partners and how they work closely with their portfolio companies. And this is a bit of a hot button topic right now in the private equity world, because we've seen some of our PE partners really expand their ops teams and add in more resources to support their portfolio companies. And then we've seen other PE firms shrink their ops teams and rely more on external vendors and not have the fixed cost of having all that talent in-house. So really interesting type of conversation. And Elliot's perspective is in bringing a ton of industry expertise and operational experts that really understand the types of companies that they're investing in so that they can create as much enterprise value as possible. And we've seen that model work a lot inside PE firms, especially those that are vertically focused or industry focused, and there's a lot of overlap in the types of companies that they're investing in. So Elliot shares a lot of wisdom in terms of how they're implementing this inside their portfolio companies. And I think if you're thinking about doing the same, there's a lot to learn from his approach and how Broadwing is approaching this conversation internally as well. So with that said, I'll leave you to it. Enjoy the episode. All right, Elliot, welcome to the show. How's it going?
Well, great. Thanks for having me.
Yeah, excited to have you on. So why don't we start with your background and Broadwing, and let's take it from there.
I'm from Fort Worth, Texas. Grew up here in Texas and went to college at Texas A&M, was a finance major with a heavy concentration of science hours. Thought for a while there that I might want to go into medicine. And when I got into my upper level finance classes at Texas A&M, actually that was the first time I ever went to New York City. Learned about investment banking, thought that sounded like a great challenge, and decided to start the career there on Wall Street with Merrill Lynch doing telecom investment banking. Was there for a couple of years and worked with such large companies, AT&T, Bell South, Media One, on capital markets and M&A, that it felt like sometimes we were not impacting day-to-day operations and strategy, right? We were doing a lot more kind of financial accounting type capital markets engineering. And I really wanted to work with the heart and soul of an organization. So I joined, I didn't know what it was called at the time, but this was middle market private equity. I joined a private equity firm in Midtown Manhattan. We were investing out of a couple of $300 million, $350 million funds in manufacturing, services, and distribution. And that was in 2000. And I've spent my career in the lower middle market in those industries ever since, working with management teams and seeking to improve their companies by being on site with them and really getting deep into the operations of their companies.
And is that what led to the foundation behind Broadwing itself?
It is. In fact, to kind of map from the Northeast back to Texas, I'm based in Dallas now. Broadwing's based in Dallas, and just about all of our team is here. I went on to grad school, and at that time, coming back to looking to get back to Texas at some point, private equity was very much either from family offices, energy, real estate, kind of specialist firms, but it wasn't a very robust market at that point in Texas. There were definitely firms here, but it was a handful, right? And there was a new firm starting that I joined that had a rich background from Bain and Company and used the Bain toolkit to improve operations, invest in special situations. I was at that firm for 17 years and really really love that approach, working side by side with management to help stabilize a company and chart growth. And my partner, Andrew Boisseau, and we started Broadwing to build on that approach, but to re-angle it a little bit. We use deep operational resources, in a lot of cases, operators that we've worked with before at prior portfolio companies. So they understand our approach to value creation, the pace at which we like to move. We speak the same language, so to speak. And so that's our ops team. And we could talk a little bit more about that, but it's an integral part of our approach to creating value in the lower middle market. And we focus on stable to growing companies. We're platform builders, and using that operational investment background, we started Broadwing in the fall of 22 to pursue this strategy with deep operational resources.
Yes, talk about that. Like, how are you bringing that expertise, and how are you fortifying the foundation? Like, just walk through this framework that you're bringing to these companies, and what kind of companies are you focusing on? Because I would imagine that you have some core expertise in certain industries.
Good. A lot of ground to cover there. That's a fulsome question.
Yeah.
So let me start. Let me break down to a couple parts.
Yeah.
We have a very systematic playbook, and it starts with our playbook, which is our approach to value creation, but trying to do it in a codified way, where it's relatively systematic, where we can have consistency and approach across different investments. Not everything in our playbook is going to apply to every company or every industry or to every business model, but this way we can make sure we're at least thinking through all the best practices that we've developed over the course of our careers to stabilize and grow, stabilize and scale companies in the lower middle market. And there's 5 parts to our playbook, that we really embark on after we acquire a company. But the first part is called Fortify the Foundation. That's our 120-day plan. We have a 10-day hot list where we're very focused on the post-closing conversion tasks that have to happen for cash control, for reporting, for risk management. And then over the next 120 days, we're implementing that Fortify the Foundation approach with management and with our ops team. So we have our investment team, our ops team, and management working towards a solid foundation that ensures best practices for risk management and governance, initial KPI reporting, filling out any gaps there are in the team, and starting to lay the groundwork for the rest of our value creation. As we move into out of that kind of 4, 5, 6, not everything gets done in 120 days, but we can start it, right? We launch it and we get through all the important stuff and a lot of it. But with that stable base, with a firm foundation, then we can scale for growth. And that's focused on growth acceleration. We look at multiple ways to grow revenue, grow with customers, grow into new geographies, and potentially grow by M&A. Just to give you a sense, since we launched the firm 3 years ago, we've really been investing after some foundation building ourselves. We've really been investing over the last 2 years, and we've consummated 11 investments. So an opportunity to see the playbook at work, 11 investments in 3 platform companies. So we focus on growth acceleration. That includes obviously M&A, operations optimization. We have a number of things we do to look at productivity, throughput, efficiency of how a company provides its services or manufactures its goods. We also look at talent and technology. That's ongoing. We're always thinking about how do we attract, train, and retain the best folks we can for our team at all levels of the team. And a lot of times we try and create an in-house recruitment engine. And so in addition to growth acceleration, ops op, talent technology, we spend a fair amount of time on stakeholder impact up front. Even during our diligence, we're thinking through not only how do we build a company, but how do we improve the culture at the company, employees' lives, and their presence in the community. How can they give back to the communities where they operate? And so that's kind of the fourth pillar. And then our fifth is asset monetization and exit, AIM. What are we aiming for? We're always aiming for value increase, sustainable equity value increase by exit. And so we train our management teams on what that means and how to think like that, and then also monitor and measure the necessary elements along the hold period so that by the time we're either approached about an exit or we're ready to exit, everybody's ready, right? We have the right mindset, we have the right data, and we can engage on a timely exit.
So let's expand on that. Let's start with the foundation piece. When you say fortify the foundation, what do you mean by that?
Sure. So a lot of the companies that we work with are very, very good at what they do. And they've been doing it for decades, right? A founder may still be involved, a family. They know their job, they know their industry and their customers better than we ever will. But they may not have all of the best practices that you would expect to see at a larger company, maybe at a public company, right? A company that's been had institutional capital, had professional management teams work on it for a number of years. And some of this stuff takes a while to develop. A lot of it is as much a habit and a mentality as it is a capability. So we want to provide our companies with the capabilities, right? The instruction around these best practices, and then equip them with the tools they need. And a lot of times that will be laying a foundation for new technology, working through everything from customer inventory management, enterprise resource planning technology, financial software and services. There's different estimating, project management, tying that all together, training them in it, and then spreading it throughout the entire organization, all the locations, all the acquisitions. Technology is a big piece of that. But to really get technology right, you have to understand your own processes and systems. And a lot of times in companies in the lower middle market, their processes and their systems are more innate. It's just what they've been doing, and they can do it by rote, right? They can do it in the dark. They don't need the lights on to know how they do what they do well. But without writing it down, without providing it in a systematic way, it's hard to repeat it. It's hard for new employees to adopt it. It's hard to scale that and multiply it at other locations. And so we spend a fair amount of time up front as well, crystallizing what are the things we do really well, what makes us special as a company, writing those down, and then being able to build technology or internal processes around that. Once we get those stable, then we're able to think about, can we do this in another location, right? Can we expand our own capacity internally so that we can double in size where we are in the same geography today?
Yeah,
So that's the foundation for scale.
there's a great book about this. It's called Profit from the Core, and it talks about like a three-step process, which is first you define the core and you identify your sources of market differentiation and power. Then you strengthen the core by figuring out where do you need to double down and really what helps you expand your mode or your market positioning. And only then should you kind of expand the core. And it sounds like this is fairly similar. It's like really understanding where you're deploying your capital and understanding the strengths of the business and investing into those key areas, because that's going to set that organization up for success.
I think that's a great way to think about it. Um, and there's a number of instructional things we'll do with management as well. I'm not familiar with that book, but it sounds like one I would enjoy and should check out. What we also provide and spend a lot of time with management on site helping chart is we provide resources to do this as well, right? So it's one thing to know it. It's one thing to know what to do. It's another thing to have a team like the Broadwing team help you do it, help you implement the tools, right? The processes, the ideas that you might read about in that book or that we have in our playbook. And so our Broadwing resource group, we call it, is really the second piece to that. We have an investment team, sourcing opportunities, structuring, thinking about diligence, right? Kind of tip of the spear on leading the investment charge. And then we have a resource group. That's our operations team that works with management teams across our portfolio. And we've organized it in a very effective way. We think it's somewhat unique, certainly for a firm our size, but an effective way where we have operators with deep operational experience, having sat before in the seat of the CEO, the CFO, the COO, but they're not looking to do that full time at this company. They're there to be an advisor, but also to be an implementer. So they will own specific value creation initiatives. They have, as we track this internally, multiple lines. There's usually a company owner as well as a Broadwing owner or champion, right, to help do it. And a lot of times, Broadwing is trying to carry the ball, the heavy water, so that management can focus on the rest of running their business. So we're providing resources, boots on the ground, people side by side with management who have experience, who knows what they're going through, and who also know what the end result looks like. They know the end state that we're going to and can advise, can coach, can be in the game playing, so to speak, to use the sports metaphor, player coaches that can actually help implement all of these ideas we have about how to strengthen a company. And so we have a matrixed resource group. We have folks that stay with an investment for the life of the investment, and then we have folks that are deep functional expertise as well.
How do you prioritize that? Like, obviously, every business has all kinds of levers, and operationally, you're going to have to make some trade offs. And then on top of that, you have your own experts and advisors that you're bringing into these companies. So, how are you determining where to deploy your limited resources? Because there's only so many things that a business can really focus on in a given quarter or a given year.
You're absolutely right. It's easy to come up with a lot of great ideas right at the strategy session. They all can sound good, and management can even say, we agree, these are fantastic, but we only have so many human capital resources to deploy against them in any given period. And we can help broaden that, right? We make the possibility set larger based upon our own, but again, we also have limited resources too. So at a high level, it's a collaborative approach between Broadwing analyzing, saying what has the biggest impact, profit margin, sales potential, and what has the highest likelihood of succeeding in a given time frame. How long does this take? What's the capital investment behind it? To the extent there's capital investment or a J curve from a business plan or a new location startup, that's an investment, right? And so we have to think about that, whether it's an expense or not. We have to think about it in terms of limited resources and where is this particular company going to be getting the highest return from this type of investment. And then we have to stack and prioritize those with management. So it is a collaborative process. We obviously have our thoughts. We've seen what's worked at a number of different companies and industries, but they know their company, their employees, their customers, their stakeholders in a much more intimate way than we ever will. So we compare those, force rank them, and then start to try and do as many as we can at once.
Mm.
And the construct is always when we have too much, feel free to raise your hand and say, okay, this is too much. We
Mm.
need to back off on a couple of these initiatives. Not that we shouldn't do them, but let's delay them. Right. Let's give ourselves some more time.
How much of that work is dependent on the talent? Because as you're building these operational plans, like, you actually need the right people. And when we find when we're working with private equity investors and we're making these recommendations, oftentimes it also requires a transformation on the team because maybe there's not the right marketing leadership, or there's a new CRO required. Sometimes even the CEO has changed. So talk about the talent side, because that feels like a huge throttle on making some of these action items a reality.
So we found that, well, to your point, talent's critical, right? We have to have the right folks on the team, and the right folks don't always have the skills that they're being asked to use for the next set of initiatives, but they're the right folks if they want to learn those, if they're open to new ideas, if they're willing to try it, if they're willing to learn from others, maybe in our portfolio or on our team who have seen it happen before and can help coach them through that. So we're looking for folks that are learners, folks that have fire in the belly and want to win, want to succeed, um, and are open to trying something new, even if it's hard or challenging. Um, and and so we love working with whoever is already at the company, right? That's where we always want to start, is is with employees, owners, folks that have tenure with the customers, suppliers, and the products and services of that company. But we're also very willing to invest in the team. And that can take the form of training the team. It can also take the form of adding to the team. A lot of times, companies in the lower middle market may be running very lean. And there's a couple risks from that, right? It's not just what's their capacity, it's also burnout. Are we going to lose great folks when we ask them to do even more or in a different way, to do some new stuff in addition to what they have been doing? And we don't want to lose folks. So we will invest in the team. We very much believe that human capital is an investment, it's an asset. Our people are an asset, and so we invest in them, and we invest to find more great people to add to the company. Um, our folks are there to help. Again, it's we're not full time in the business, and so we're a complement, not a substitute for management. Generally, we want to augment, not be doing it instead of. But it allows us to get even more done because we've increased that talent pool by using our own operations team.
Yeah, talk about that piece because operations teams are something that a lot of private equity firms have either invested into or they maybe have one operating partner. Some have large ops teams like Vista or Insight, and there's a bunch of firms in between there. So, talk about the economics of that because in some ways you're kind of building an in-house ops team, but then they constantly have to get involved with these companies even though they're not part of those companies. How do you make that work as a private equity firm to have so many folks that are getting deep with your investments and helping them at an operational level?
Well, we've found that there's real power in focus. There's focus and there's communication. It's hard to stay it's hard to stay up on everything going on and be in true communication about it, not just prioritization, but where do things stand, where can we use help, what's effective, and where are we moving on to the next initiative because something's been finished. So we try and over communicate both with our portfolio companies and their management teams and internally. We use technology ourselves to track everything going on. At any point in time, there could be over 100 initiatives that we're assisting with across various companies. Not all of them are urgent. Not all of them are a massive priority. Some are longer term, others are more imminent. But we're trying to keep up with those. And then our ops team has their own cadence internally to work through those. We don't want to get in each other's way. We don't want to have too much on our plates where we can't get anything done. So we're big on prioritization, of course, but we also can't do everything in sequence, right? We can't do everything in series. We have to be working in parallel if we're going to try and create the type of change and value appreciation that we're looking for here. And by the way, management and the sellers, the former owners are all incentivized generally to help think like owners and build that equity value over time. So we're all pulling in the same direction, but we don't want to over meeting people to death. And I think that's
Yeah.
the big challenge is how do we hold people accountable, make sure we're all prioritizing our time and what we're working on, but not doing it in a way where we're over communicating. And that's a challenge. That's a balance.
How are you allocating operations or operating people to portfolio companies? Is there like a ratio, 3 to 1, 2 to 1, 1 to 1? Like, how do you approach that side of it? Because in some ways, like a CEO doesn't always want an operating partner telling them what to do. They kind of want to use them almost as like an advisor, but then still want to run their own business. So how do you approach that?
We try and have a similar approach, but we're willing to be malleable and we're willing to tailor it for that company. Even over time, the needs of that company might shift. And so if you think of it both kind of horizontally as well as vertically, we have operating partners that travel with a portfolio company during our partnership period. And we actually don't call it a hold period because we're not passive holders. We call it a partnership period because we are active partners with management, and we are active during that entire partnership period, which obviously can be over multiple years. So the first is the horizontal relationship, which is usually one, maybe two of our resource partners that will travel with that company for the entire partnership period. That means they could be board members. Sometimes it's helpful to have that title and to be able to speak into board level strategy, even as they're also working on tactical items with the company. And they may not be on the board. That it may be more of a trusted advisor, a CEO advisor, um, but they they will do everything from walk plants for new locations to supplier meetings as we're building supplier relationships or working with customers on new sales initiative. They are very much a sponsor representative. They are a face of Broadwing, the equity owners, and can help that management team think through, but then also execute on growth and cost initiatives, right? And so that's the horizontal benefit. And then the vertical is the deep vertical expertise that we have in various areas like procurement, ERP implementations, technology implementations, lean implementation, and lean manufacturing practices, FP&A. And so we have members on our team, and that's growing, right? We're a young firm, but we expect to continue growing that, where we will have deep functional expertise that can go on site across the portfolio at different companies based upon the needs of that business to help assist the management team on more temporal initiatives, right? Shorter term or more discrete initiatives. And
Right.
so that's how we try and balance it, right? It's kind of both. It's you know the company, you know the team, you go with them, and then other kind of the other part of our group goes deep on certain initiatives. They might be multi-month initiatives, but the ones that allow them to work across multiple companies in the portfolio.
Right. And then what about the company specifics? Like, as you're kind of, there's all these nuances inside businesses, right? So, are you building, like, I'm sure every PE firm has a playbook, right? And given the types of companies you're investing in, maybe you could touch on that. Like, how does that affect the company specific plan you're building, and how much of it is like a repetitive playbook, or like something that is just more standard for you versus
Hmm.
more specific to the reality of the business?
I would say it shifts over time. And, up front, we have a fairly standardized playbook. And I would even think of it almost more in terms of diagnostic and the prescription, right? So we up front can go through a number of diagnostics on everything from stakeholder impact, ESG, risk management and governance, safety, and employee benefit. And this is we do this during diligence, but we also will update these on an ongoing basis as a check-in, right, to see how we're doing. And those diagnostics then help inform, here's the standard prescriptions that we'll have for these, right? If it's governance, we have certain things that we like to see and how we how we are board members of a company and how we organize risk management and authority matrix and things like this. And so those are fairly standard. But once we get past that, we tailor to a specific company the strategic plan. And it's kind of like if you have a playbook of plays, then what are the actual plays that we're applying to this specific company? And to your point, that will differ between manufacturing companies, distribution companies, and true commercial industrial services businesses. They're different business models, and so they have different needs. They also oftentimes have different capital requirements, different growth constraints and different growth investments required. And so it does require tailoring. And we have a cadence, obviously, during when we're performing due diligence, we try and spend as much time as we can with the management team. We want to get to know them. We also want to paint the vision together that we all buy into, and then think about the strategies and the tactics we'll use to pursue that vision. But post closing, we also need to be in communication, and it's easy to get in the weeds. It's easy to get too far down in the details, but we try and communicate on a weekly basis. On a monthly basis, we have more in-depth finance ops reviews. On a quarterly basis, we add in more strategic elements, perhaps some management instruction, even from on the legal side or the market side, and that'll be every quarter. And then at least once a year, oftentimes more frequently, we try and have a strategic retreat. And that can be more than just the C-suite. It might be the entire senior leadership team or the executive team, where we can get away and think about the business with them. Now we try and have a little fun. Might include a cornhole tournament or game show competitions, or we recently went curling over a couple of hours at one company. And believe it or not, you've probably spent some time curling up in Toronto. This was actually in Nashville,
Mhm.
where we went curling. Pretty hot curling scene in Nashville. It sounds like. But we'll have some fun. We'll break some bread and have some food together and share some meals. But really, it's trying to think through what are the different pieces of the business that we can work on that are strategic and critical to the success of the investment. And so it's usually involving sales, it's new products, it could be expansion projects. It's the different pieces, the functional areas of the business, and how are we thinking 3, 5, 10 years out about those. So we'll pull up a little bit, get a big view, and then go back into the details of the business on a more regular basis.
Yeah, I think that is really insightful. I especially like the part you mentioned about diligence. And walk us through that a little bit more. So, when you're in a diligence phase, is your ops team actively involved in that process? And are you already building that operational plan? And to how much detail is going into the plan at that stage?
So, and that's also where we start to prioritize, right? At that stage in diligence, we are working on the plan. We're dealing with limited information and with limited mind share of the folks that are able to provide the information, right? So sometimes it's limited information. It might just be part of the team, right? It's often the finance organization of the company, the owners, maybe some HR, maybe some select ops folks. But most sellers don't want us to distract their business, distract their employees from their business too much. So we're dealing with partial information, a limited amount of people to interact with, and there's time constraints, right? Because we're doing a lot during diligence, aiming towards a close, but also trying to lay that groundwork. So we do involve our operating team. They're generally working on building up the game plan on the sales operation side. They're going through some of these multi-page diagnostics we have to assess the business, but it's not just a grade. It's not just a balance sheet assessment point in time. It's then prescriptive. So what are we going to do in what order and who's going to own that, right? Is that something that the company runs with the ball? We recognize when we come in to a business, a lot of times our ideas may not, at least for Fortify the foundation, half of them probably do not seem like they're actually critical to the operations of the business, but they are critical to the well-being of the company over time, and they'll be appreciated by buyers. They'll be helpful over time in softer ways, more subjective ways like communication and employee retention, quality and safety, things that, again, they may already be good at, but by quantifying it, by systematizing it, by starting to keep a record of it, we can be continuously improving and we can share that with future buyers. So it's a little bit of a different way sometimes to think about how to run the business, and
Hmm.
it takes time to roll that out. Part of that's planning for that is during diligence with our ops partners and outside consultants. Implementing it is with our ops partners and management post close.
Hmm. Yeah, that's really insightful. Unfortunately, we're coming up on time here, but Elliot, before we close off, like as you're thinking about other PE firms and the work that you've done and the lessons that you've learned, what advice would you have for them as they're thinking about building an operations practice like you have?
It's interesting. I've always valued relationships in business. To me, private equity and business in general is all about people. It's all about personal relationships. And so even when, and at other points in my career, when we weren't working with an operational model using operating partners, it was still those relationships I was building with the managers and the executives of those portfolio companies that we're using now, in a different approach in private equity. And so there's value in relationships across your entire career. You never know who you meet that could be a future competitor, a colleague, somebody that you work with at your company, or a source of capital. And so my advice is value human relationships, try and cultivate them, and then work with them when you can. Work with great people. There's no replacing being able to look at somebody and say, you remember when we did this project 10 years ago, or you remember when we did this during the Great Recession. You can't manufacture that type of longevity together, but it really speaks volumes if you've had those types of relationships throughout your career where folks want to keep working with you.
Yeah, that's really great advice. And Elliot, thanks for sharing that. And before we close off, if people want to get a hold of you or Broadwing, what's the best way to get in touch?
Yeah, would love to connect. You can reach out through our website, which is broadwingcap.com. And those messages come straight to us. I'd be happy to chat with anyone.
Awesome. We'll be sure to include that in the show notes and everything else as well. And with that said, Elliot, thanks for coming on and sharing your wisdom. I think there's a lot of PE investors that are wrestling with this idea of building an operations arm or how much they should invest in it. And I think you shed a lot of light into that. So I appreciate you doing this.
Well, great. Thanks for having me on. Really appreciate it.
Thanks for listening to today's episode. Before you take off, just a few requests from our side. Number one, if you enjoyed today's content and want more of it, please subscribe to the podcast on your favorite podcatcher. Number two, if you are in the market for marketing strategy consulting services, due diligence services, or fractional CMO services, please visit our website at www.howtosas.com and schedule a consult today. And number three, if you haven't already, grab a copy of my book, Post-Acquisition Marketing. It's available on Apple Books, on Amazon, and any bookstore that you can find online. Get a copy because it walks through the framework that we take all of our clients through, and it'll definitely add value to your business. And that's it for today. We'll see you guys next time.